What's up, everyone? This is CryptoSof here, and today I'm going to teach you guys how to trade chart patterns and swing trade them. So these aren't going to be quick trades. These are trades that take a couple days to maybe a week or two, and these are on larger time frames. As you can see, we have Ethereum on the daily chart. Sometimes we go into the 4-hour chart or the 1 or 2 hour chart just to identify it, but we mainly trade these on the 4-hour and the daily chart. So for today's video, we're going to try to identify a falling wedge pattern, which is a series of lower lows and lower highs that comes from a downtrend, and they coil into this pattern called a wedge, a falling wedge, and that becomes a reversal pattern where prices start to break out just like you see down here. All right, so and then what happens is you take that first move, the first low and the first high, and that measurement is what you measure from the breakout. And wherever that goes is where the target is, the minimum target. All right, so these are based off classical charting patterns, and we're gonna go ahead and see if we can find one. So the process for me is as follows right here. So I scope the field. I'm just looking patterns that I can see with my eyes. Then once I identify a pattern, I begin planning out the trade, making sure the pattern is legit and it's going to work. Sometimes I like to be really strict with these patterns, because if the stricter you are with the patterns and the guidelines, the more clear it's going to work. Because if you start bending the rules a little bit, then you may start opening up your eyes for a biased opinion where you want it to be something that it's not. So I like to stick to the rules. And lastly, we execute the trade. After we plan out our trade, we execute it as follows. So right here, I can see a falling wedge pattern. I'm not sure if you guys can, but let's go ahead and draw it out. You can see right here clearly that we have lower highs, came from a downtrend, and lower lows and lower highs. So here's the low, here's the high, and here's a lower low from this one. Here's a lower high from this one. Then here's another lower low from this. So lower lows and lower highs. We're coiling into a small spot, and then we end up breaking out. So we're going to go ahead and remove that up to here. And so we're going to imagine that this is where we are in time. We're back in time now, and you see this trade. So what we do, like I said, is we scope the field. Once we see this, we identify the pattern. So we're assuming that maybe this could bounce here, here, and then hopefully break out, retest, and then shoot up. And it hasn't happened yet, but we're hoping that's what the case is going to be. So with that being said, we keep this in mind, maybe set some alerts by putting some price alerts right there. Okay, so we can in the replay mode, but yeah, you put some alerts just to know when it breaks out and stuff like that. Come back and watch it every few hours, a few days. And like I said, we're hoping for it to bounce that one last time. We want 5 touches, 1, 2, 3, 4, and hopefully 5 around here, and then break out. So let's go ahead and play it out. And as you can see, we did come down. We bounced right here. So now it's looking a lot like this. 1, 2, 3, 4, 5. 5 touches and then a breakout. So if this pattern is correct, we've scoped the field and we identified the pattern. Now it's beginning to break out. And the conservative way to trade is let it break out, then come and retest. And the retest cannot make a lower low from the last low. So we can retest, get close, but then eventually continue upwards. So that's what we're looking for. We're looking to buy on the retest. That's the safest way to buy. So let's see if we get a retest. All right, let's go ahead and rewind that a little bit. I want to show you guys this on a lower time frame. Okay, so as you can see, we broke out already out of this resistance, and now we broke out. So that's the official breakout. And as you can see, we're beginning to retest this trend line, and we're turning it into support because we haven't broke it yet. So that old resistance is now support. So as you can see, it's clear support now because we tested it here once, tested it here again, and we tested it a third time right there, and it has not broken down. So in this case, we just make sure that this low was not breached, and you can see that it wasn't. So we want to go ahead and take that trade right there. We want to enter right there, and with these patterns, you always want to put the stop loss at the low. So the retest, it looks like it's going to be a 3.9% stop loss, almost 4% stop loss. And now we're hoping it goes up. So according to the classical charting patterns, if you identify these correct, it should break out now. That should be the low, and we should continue up. Now, how do you know where to place your target? Should it go higher? Should it go lower? Where do you place it? So you base that off of this. You take the first 2 touches from the bottom and the top, draw a line, and that measurement from the breakout is where it's supposed to go. So we're going to go ahead and identify it right here. Here's the bottom. We're using that as the top. So we're going to make a straight line, make that dotted line touch those crosshairs right there. Now we're taking this and we're putting it right here. You can see that the target is right there at 215-ish. So we're gonna go ahead right there. And it looks like we would make around 27.5% profit versus a 4% stop loss. Let's say 27 to 4, which is great. So we're taking that trade. And now what we've done, let's go ahead and look over here. We've scoped the field. We've identified the pattern. We planned out the trade. Here's the plan right here. We wanted to enter on the break, the retest. So we planned it out. Once we see this last touch, we already have the idea. Okay, let's let it break out. When it comes back down, we'll grab it. So that was the plan. Put the stop loss at the low, and we know exactly where we were going to put our take profit based off of this. We know exactly where we're going to put a stop loss, our entry, and our profit, take profit. So that's all part of the plan. That's before you take the trade. You don't want to take a trade, then decide where to set your stop loss or where to put your take profit. And then lastly, we execute the trade. We enter, we set our stop loss, we set our take profit, and we let it run. We don't touch it. Either the stop loss is going to hit or the take profit is going to hit. So let's see what happens. If we're correct, if we're right, and this pattern works, then it should start impulsing up here, and it could go higher, it could go lower after that, but we want to assess it at this point once we hit 216. So let's see what happens. As you can see, we broke out. We're in good hands now. Things are moving smoothly. And right there, it touched it twice. We broke out. We would have been out right here, came back down, made another push up, and then started coming down. So this was a perfect trade, 27% profit on 5x leverage. That's like, what's that, 120? Would that be like 135? 135% on 5x leverage. For a 4% loss on 5x leverage, it would have been 20%. So it's all depends on what you use for leverage and stuff like that. But overall, it was 27 to 4. So that's a great trade right there, guys. That's how you play the falling wedge pattern. You wait for the trade to break out, then you enter on the retest with a stop loss at the low. You take the measurement for your target. And if this is correct, then we should continue down now. Like I said, this is a trend reversal. This was a reversal on the short term, and now we're going to continue that trend downwards, most likely. And as you can see, we started breaking down. So you got to remember to take those profits when you get them. You take them humbly and say, 27% is perfect. That's all I want. I'm not looking for a 100% move. I want that 27% and get out, because what if the trade goes against you? If you were to hold, you would have seen a series of just big pushes down, all the below the low. This pattern is done, and you would have been in a loss at that point. And you have held for a very long time. So you want to get out, like I said, where the pattern tells you to get out, and you wait for your next trade. So let's go ahead and give this a recap. We identify the pattern after we scoped the field and we found the pattern. Then we tracked it and identified it. Boom. Once we hit that 5th touch, 1, 2, 3, 4, 5, 5 touches, we knew it should break out. We don't take the trade yet until it breaks out and retest. That's where we begin planning. Plan out the trade. All right, I want to enter here, stop loss here, target there. Does this look like a good trade? 4% for 27%? Hell yeah. Take that trade, execute the trade, and let it run. This example worked out perfectly. There's a lot of other patterns that I could teach you guys how to use. This is something that took, let's see, it took about 12 days, so a little over a week and a half to finish forming, and that's why it's called a swing trade. And that's it, guys. There's a lot of other trades, like I said, a lot of other patterns that I can teach you guys how to play. If you're interested in these videos, if this has helped you in some way, if you like the videos, make sure you give this video a thumbs up, subscribe to the channel, comment below other videos you guys want to see. Make sure you check out the description for the link to where I trade, which is bybit.com. I have the link in the description, and I also have the links to the Telegram group chat and the channel where you guys can join our community. I think we have about 700 members in the group chat and over 1,000 members and growing on the channel. So come on in, join,